Let's talk about top-down analysis. Now, top-down analysis is just simply analyzing from the daily time frame or weekly time frame down to the 15-minute or 30 minutes time frame. Let's give an instance. Let's use GBP AUD. Right now, if I want to analyze this chart, I'll first check my daily time frame or weekly time frame. Maybe I don't see anything on my weekly, then I'll now move to the daily. Right now, there's not really much in the weekly because you know that price is just around this range and it takes a very long time for it to get to probably this zone, because from the weekly we're seeing a break here which has happened since it broke this structure since March 22nd. So March 2022. And if I have to mark out a zone, this is zone we'll mark out. But it's been a while and it takes a very long time before price will get here. So let's not bother about the weekly for now. We'll move to the daily time frame. From this view, we know there was a break of structure here. It broke the structure right here. BOS. I want to mark out your zone. You mark this out. Supply zone. I want to mark out your second zone. This is what you mark out. Now the thing about the second zone, if you check it now, price has mitigated this zone. But we are not sure whether price will react to this or react to this first zone or this one up. So that's why you use confirmation entry. So when price gets into your zone, you use confirmation entry. But now, when you check this daily time frame, now we're seeing that price has already tapped into the supply zone here. But basically, I feel like this might be a liquidity, a swing high liquidity that might mitigate this upper zone. But now let's go to let's check the 4 hours if there's anything there. There's nothing really there. Let's move down to the 1 hour time frame now. Now from here, we're seeing a break of structure right here. We're seeing a break right here. So you just mark out your zone, which is this one here. My body, that was the essence of top-down analysis, but it's more like to guide you, because just imagine if you wanted to take a sell from here. No, basically, we're already in an uptrend. From the 1 hour time frame, we're already in an uptrend. It's going up. But if we check the 4 hours time frame, it is still a downtrend because of the break of structure. In fact, from the 4 hours time frame, this is where the zone will be. This is where the zone will be. So it is to guide you to know where you will put your exit at. It can't be taking, let's say you wanted to take this buy now and you tap into this demand zone. You're not saying that you want to target this upper one. Yes, there's a zone there, but it's not every time that price gets there. See instance now. Just imagine if someone took a buy from here, like around this place, as I've already seen that there's a break here and you wanted to take this buy. You're not saying that you wanted to target this place, this zone, but price didn't get there. Price just got to this place. It only smashed this zone here. In fact, it didn't even mitigate this zone and started falling. So the top down analysis is just to know your exit points that are safe if you're analyzing from the higher time frame. So from here, this break of structure, and I want to take a buy, I can buy from this zone up to this zone because we're in an uptrend. That'll be taking 244 pips because basically there's no other zone there, except if you want to mark out this one, which is the beginning of the daily supply zone. If you also mark that one out, it will be fine. That is still securing over 100 pips. But basically from this view, this will be your TP for those that want to take a swing trade. Now let's now check. Okay, have we reached the 1 hour? Yeah, it was from the 1 hour we marked out the zone. Let's now check the 30 minutes. Let's see what we have there. Okay, there's not too much on the 30 minutes. 30 minutes is just showing that price had already broken this structure. And yes, it could probably sell from here. So it could probably buy from here. But mind you, the buy you take from here is not a long-term buy. Price could just come here as it's coming down. It starts with this one, yes. Give like 80 pips before reversing. You know, like I said, price doesn't go in one direction. It goes up and down. So it could react from this zone. Yes, this could be a good zone to react from. It's not a bad one. Price can also react from here. You just be going up, down, up, down. Let me say it again. Tap here, break structure, move up, mitigate one supply zone, then come down, tap to this zone, then boom, it goes up. You get my point? So that's it for GBP AUD. Let's do one more example. Let's check Euro USD. We'll do top-down analysis. Let's start from the daily. From the daily time frame, we know that price is an uptrend. We know price is an uptrend here. And if price wants to start to be in a downtrend, it means it has to break this low. This one right here. Let me change the color. It has to break that support before we call it a downtrend now. So let's move to the 4 hours time frame. Let me delete this. Now from the 4 hours time frame, from the uptrend, you know that there's a break of structure here. There's a break of structure here. So if you want to mark out your zone, you mark it from here. Now, most people don't check the 4 hours time frame. Sometimes they'll just be relying on the 1 hour time frame and 15 minutes time frame or 30 minutes. But if you don't check the 4 hours, you won't notice that price has already tapped into a demand zone here. So it's likely to buy up from here. I mean, does buy up from here. This is when that top-down analysis comes to place. See, it has already tapped into a 4 hour demand zone. If you check the 1 hour, there's a supply zone sitting. Okay, there's first liquidity here. We have liquidity building up from this point to this point. Yeah, this is it. The 3 points. Let me increase so that it sees clearly. There's one touch here, and that one, and that one. So this is a liquidity here. Then if you want to mark out to zone, there was a break of structure here. Let's say a break of structure. And you mark out this side here. This simply means that if you want to buy from this zone here, make sure your TP is not passing this side. Or in case price wants to continue with this trend and liquidity, it might just mitigate this zone. Because this is a break. And if price wants to continue the trend, I might just come up. Okay. I just come down here, break structure, tap into this zone. then continue his trend line liquidity before probably taking it out on that way. But in case it takes it out, to just go straight to this supply zone here. So my point is this: if you want to enter from this 4-hour demand zone, let's say you took a risk entry from here. Let's say you took a risk entry from here now. This can be your TP1. TP1 is here, 46 pips. TP2, over 100 pips. 106 pips. And that's just it. This is top-down analysis. Let's check if there's anything special on the 30 minutes. No, there's not special because they see the same zone. For those that don't do top-down analysis and they just want to open the market from 30 minutes, you just see that, okay, there's break of structure and there's this zone. They won't even see that there's liquidity here. They won't see this liquidity. They will just see this. Exactly like this is what they will see. And yes, price could continue the downtrend. But in a case where it doesn't continue, you'll be like, why did I hit stop loss? Because there's a supply zone here. Last buy candle, 4 seconds, I led to break of structure. This is it. It broke structure. It's meant to mitigate it. That's what to be thinking. Then you now be like, okay, that maybe it wants to tap into another zone. Then when price is here. Okay, let me use the part for instance. Let me use this one to demonstrate it. Price came here. It happened to this zone. You're trying to sell. You got tiny pips there. It now reversed. It took you out. You're not seeing it. You now, because this is the thing about psychology that Frank is going to talk about. I've already marked that to zone. I've already hit stop loss. Just close your trading view and go and do something else. Because right now, if I lost a trade, yeah, let's say I'm still working on my psychology and I'm seeing price here, I will see that, okay, that price already at a supply zone, that it probably wants to take this sell from here, that this sell was just invalid, that it wants to take from this supply zone here. But things that without top-down analysis, you won't know that there's liquidity here. Trend line liquidity is even more clear here. One, two, three. So as price has already broken this zone, just know that it is invalid. That price is just clearing liquidity. Then you wait for this move. Yeah, right here. You wait for this supply zone. So that is it.